In gold, but is this the right time to follow the crowd? This is Inside ETFs and we're talking about gold. The precious metal is glimmering again and investors can't get enough. For centuries it's been the ultimate safe haven, and in 2025 that narrative is only gaining steam. Gold ETFs are seeing a flood of infos, with prices hitting multi-year highs. After doubling in value in just a few years, some see strength, but others see signs of a stretch rally. So is gold still a smart hedge or just a shiny distraction? Let's ask Cynthia Murphy, investment strategist at TMX Verify. So Cynthia, everyone seems to be hitting record highs lately, but gold's rally really stands out in scale. What's really driving this outsized move?
It's been really, I think, a confluence of factors. So you have on one side this insatiable appetite for diversification. We've talked so much about concentration risk, especially among large cap stocks today. And so this push to diversify portfolios have benefited everything from gold to alternatives to Bitcoin, commodities in general, all of these types of assets. So gold has really benefited from that. A lot of money has gone into gold, to your point, almost $30 billion in physical gold ETFs alone this year. There's also, I think, gold is benefiting from this kind of like structural strength and improving opportunity cost as we enter a new rate cutting cycle. Gold is a non-yielding asset, so it struggles to compete when rates are high. But when rates are coming down, it makes gold more compelling relative to yielding assets. So that has also benefited gold.
So do you think this rally can keep going, or are we close to the top?
I think we probably will see profit taking at these high levels, especially as we approach the end of the year. You get some kind of portfolio rebalancing. But at the same time, on the flip side of that, you have big firms like JP Morgan, Goldman Sachs. They're all coming out with really lofty gold projections for next year. $4,000 an ounce gold. Goldman Sachs said even $5,000 an ounce a gold is possible if the stars align just right, if the economy remains a concern, GDP growth, inflation. So it could be that we see some profit taking some pressure here, but theoretically, if you look at these projections, there's at least another 7-10% upside potential just to meet these targets. So, it could continue for a while.
So Warren Buffett famously called gold a sterile asset, no income and no yield. Beyond physical gold, are there smarter ways to play the space?
Today in ETF space, you have a lot of unique takes. For example, to your point, non-yielding assets, today you can actually generate income in a gold position with the use of options. So there's ETFs like Simplify, YGLD, or NEOS, IAUI, I believe is the ticker. These are ETFs that are giving you exposure